Okay. So first of all, if we were to discuss this thing, first of all, we need to understand what is happening on our monthly uh, time frame, and our focus will be more on our monthly next draw on liquidity. That is the first thing that you need to know. And you know that it's a new year. This being a new year means it's the first candle of a new year, right? So the first thing that I'm going to do here is I'm going to check what is happening on our monthly time frame. And on our monthly time frame, you can see clearly that gold has been bullish, right? Gold has been bullish for a long time. We can see what we have been bullish since 2022. Gold has been, no, not 2023, but we have been bullish overall. So number one thing that you need to understand here is where is our next draw on liquidity. Okay, so based on this, on these candles, what I can see here is gold is bullish, right? So gold being bullish, again, we have to study the way in which these candles are closing. We are having open, low, high close candle, which means we are having what? We are having bullish candles. So having all these bullish candles, we can see clearly this candle, this one here, December candle, closed above this one with an energetic move, right? So this being an energetic move means we are still bullish. So what I want to see now is this candle here taking out buy side liquidity resting above this high, right? So this is my next draw on liquidity on my monthly time frame. And another thing that I have to understand or that I need to know is how this monthly candle forms. We know that every time when a new candle forms, it starts off with an accumulation followed by what? Manipulation and then distribution. That is how market makers conditioned the market. Each and every candle, when it starts or when it opens, it starts off with what? With a consolidation followed by manipulation, then distribution, which is what we call power of three, right? So what we have here at the moment is this candle is still expanding. And tomorrow we have red folder news, which is our NFP. And NFP, we are expecting what? We are expecting volatility injection, right? So we are expecting volatility injection, not change of direction. Something that people ba e leng gore ga ba se sentle ke gore they think NFP, CPI, all these red folder news, they change direction. No, they don't change direction. We have to analyze, and then after analyzing, that is when you can maybe look into fundamentals, or you can check what is likely to influence the move, right? But what I can say is NFP doesn't change direction. And something that you need to understand, guys, is NFP, most of the times, or I can say 80% of the time, it gives us high or low of the month, depending on our next draw on liquidity. So this is acting as what? As my next draw on liquidity up there. And guys, feel free to stop me anytime if you have a question. Okay? If you have a question, feel free to stop me anytime. Okay, so having this here, I'm expecting a push. I'm expecting buy side liquidity to be taken, right? So having this here, I can simply say, okay, this is what I have on my monthly time frame. I'm expecting a bullish candle. And what is weekly time frame saying? Okay, what is weekly time frame saying? And on my weekly time frame, I can see clearly that we have relatively equal highs up there, right? We have relatively equal highs up there. And having these relatively equal highs, one, what is going to sponsor a move, or what is going to push price to this high? That is, we need to know our key level. What are we going to use to say price is going to go up there? Then I can simply say here we have what we call a redelivered rebalanced PDRA on our weekly time frame, right? So having this weekly redelivered rebalance PD array, something that you need to understand, guys, is every time when there is a redelivered rebalanced PD array, a fair value gap resting below that redelivered rebalanced PD array is likely to be left open. And that fair value gap, we call it a breakaway gap. We call it a breakaway gap, right? That is what we call our gap. We don't expect price to fill this gap here because there's a redelivered rebalance PD array. So in this case, a redelivered rebalance PD array is going to act as what? As a roadblock.
Leads becomes a tree of life until our nights are filled with
Is that
peace
okay?
and stresses.
Okay, kindly mute your mic and switch off your cameras. Okay, thank you. Hey, Lan, a lot of you guys, your cameras are on. Kindly switch off your cameras. So I leave the meeting. Your cameras, I'm going to switch them off. Okay. Okay. So I was saying we are currently holding from this thing here. And what I want you guys to know is Merone having this here, how does a weekly candle form? Might be a long meeting, okay? Because I'm trying to the student is out but I'm just gonna explain, okay? So one, we are sitting within this redelivered rebalance PD array, right? So sitting within this redelivered rebalance PD array here, what we can check is what is happening on silver, because we have to take correlated assets and compare them, right? We can't just say, oh, I'm going to sell here and then you just sell. So what I have here on gold is gold and silver. Up here we have gold, down here we have silver. Okay, so you have to compare gold with silver. We are trying to pick the best one to look for buying opportunities from. Okay, but most of us here we trade gold. I don't trade silver, and you'll never see me trading silver. So what I'm saying here is okay, fine. Now that we have gold here and silver, we need to look for what? For SMT. So here we have what? We have our SMT. This black candle is this one here on gold. This green one, 22 December candle, is this one. And we can see clearly that gold, we managed to do what? We managed to go below this low. And silver, we failed to go below this low here. And what does this mean? It means silver is what? Is a stronger pair. So in this case, if we were to choose the best one to look for buying opportunities from, then we are going to go for silver. Why? Because silver is strong. And when we are bullish, we want to long a stronger pair. And when we are bearish, we go for a weaker pair. So in this case, silver is very strong. Okay. Okay. So after that, one, we are going to break down the internal structure of this weekly candle and check are we going the right direction? Is gold going up there? Here I just have a key level, right? And I'm trying to find a direction. Okay. So what I'm gonna do here is one, we take a weekly key level. So taking this weekly key level, we can drop to lower time frame and look for what we call buy program activation, or we can say signatures that indeed price is bullish. Okay, so gold, you can see clearly this thing here, this is an indicator. Okay, it's called ICT HTF higher time frame candles by Fadi. You can check it. So these are daily candles, and on our daily time frame, you can see clearly that we are within this daily fair value gap, right? So sitting within this daily fair value gap makes it much easier. Okay, so this is our daily fair value gap. Let's go to daily and show you, maybe you're confused. This is what I'm talking about. Here we have what? We have our daily fair value gap. Okay. But remember that this one here, this one, let me make it red. This one indicates our weekly key level. This one is our daily key level. So they all have to align. Okay. We have to have the same idea what gold is going up or gold is going down. But in this case, it looks like gold is bullish. Okay. So having this here, we are going to study the behavior of this week's candle. So you are going to mark Monday. So let me go to 1 hour so that I mark correctly. Monday, I'm looking for Monday, midnight open. So this is our Monday. So we know that we are bullish, right? So knowing that we are bullish, what I need to understand is the internal structure of this week's candle. Okay, so Monday is here. You have to understand the true day open. Hey, now, there's what you call actual opening, and then there's a true opening. I'm going to share this with you guys. The student, if you are here, forgive me. It's a new year. I'm just gonna share this. So we have what we call true week open. So our true week open will always be Monday, 1800. Okay. And then we have what we call true day open. And our true day open will always be 000 midnight. Okay. And make sure that if you are someone who trades currency, make sure that your time zone here is at New York because we are using New York local time. I hope that I'm clear. Make sure that you are using New York local time. Your default setting, I believe it's UTC or exchange. Make sure that it's UTC, I mean New York, okay? So having this, one, we have to long or we have to buy below true opening and we have to short above true opening. When I say short, I'm simply saying sell. When I say long, I'm simply saying buy, okay? So we are going to look for our Monday 1800, which is our true day open, okay? We are looking for Monday 1800. We have to manipulate that. So this is our true week open here. So this is our true week open. Okay. This blue line represents our true week open. And we can see that beginning of this week, we went up there. And then as the week unfolded, we went below our true week open. So we have manipulated our true week open, which means we can look for buying opportunity. That is what we want, right? That is what we want. And then after manipulating this true week open, let's revisit what we call interbank price delivery algorithm, which is phases of price. So, hey, guys, you have to understand, how the market moves, or I can simply say algorithm. Interbank price delivery algorithm, or we can say IBDA market cycles. So from IBDA, guys, whenever we have a consolidation, we don't expect to see a reversal straight away. We see a consolidation, expect an expansion. So in this case, we had this consolidation here. And how do you see what this is a consolidation? Relatively equal highs and lows. So this is what you can do if you are confused. You can always check your line chart. Or is it a line graph? I don't know. You can see that these highs are relatively equal. There's a rectangle here. Price is stuck within the same area. But when we are using candles, maybe these wicks are going to confuse you, but just know that wicks are there to make noise, okay? They don't matter. Okay, so after this consolidation, what happened? We saw an expansion. So this expansion came in form of what? In form of what you call manipulation. So this is a consolidation into a manipulation phase. And you can see clearly that we have what we call power of three, something that I mentioned contain. So This is a sign of reversal. Whenever you see consolidation into manipulation and manipulating into a key level, that is an indication that price is willing to do what? Price is willing to change direction. Okay? That is an indication that price is willing to change direction. So, one, what am I expecting? Or what is price manipulating into? This purple level here is what we call our daily key level. So we are manipulating into what? Into this daily key level. We were manipulating into this daily key level. So manipulating into this daily key level means we have taken out sell side liquidity resting below these lows here. We have taken sell side liquidity resting, or we can say sell stops resting below these lows. And this is what we call order pairing. You can research about, sorry, you can research about order pairing. And there's a sell side liquidity being taken. So after this sell side liquidity is taken, obviously price is going to go for what? Obviously price is going to go for what? Price is going to go for buy side liquidity. So this is acting as what? As my next draw on liquidity at the moment. And this is a high that I expect price to take out tomorrow. Again, very, very important. SMT. Okay. So gold here. Can you see this thing? This cross thing here? Can you? This. Can you see this? As I move my thing.
Yes.
Okay. So as I point here, look down here. This low here on gold, I'm going to mark it. And silver, it's this low. Can you see this? Okay. This low on gold, we failed to go below this low, right? But silver, we went below this low. So this is what we call SMT. And SMT, we are simply looking for the best pair to look for opportunities from. Like I said earlier today, when we are bullish, we want to buy a stronger pair. And let me share this with you. A stronger pair, in this case, it's a pair that failed to take out a low. It has to be the same lows. You don't just pick any low, random low, worry, oh, this low was taken, so it's SMT. You saw what I did, right? So this low on silver, which is 5 January low, was taken. But gold, we didn't go below this low, which means gold is a stronger pair in this case. And a stronger pair is likely to have clean price delivery. A stronger pair is likely to have clean price delivery. Okay? So after taking our key level, let me show you something. As we were going back to this daily fair value gap, pay attention to this fair value gap. It was respected. Pay attention to this order block here. It was respected. Pay attention to this fair value gap here. It was respected. And as we went down, price left behind 1, 2, 3 candles, which act as what? As an order block. After taking our key level, we saw this order block failing. So once we see a bearish key level failing after taking a higher time frame key level, that is an indication that price is willing to do something else. Or we can simply say we have shifted from sell side of the curve to buy side of the curve. We have simply shifted from sell side of the curve. As we are going back to this fair value gap, we were on sell side of the curve. Now that we have checked this fair value gap, we are on buy side of the gap. And remember that price does only two things. Price will always look for imbalances, and price will always look for what? Old highs and lows. That is the logic. That is what price does every day. And then fine, we took out this high here. So this high being taken, we can simply say we have what? Our break of structure or change in state of delivery, or we can simply say, what's that? Chalk. Chalk. What is chalk? Change of character, so they say. Change of character. After taking a key level, very, very important, it has to change direction after taking a higher time frame key level. And something that you need to understand, guys, is smart money starts operating from at least daily time frame. From at least the daily time frame. Smart money orders are way too big for both 4 hours. You have to understand what is happening on daily time frame at least. We started on monthly, and now we are on our hourly time frame. So you have to understand the relationship between all these time frames. Okay, fine. Break of structure here. We are below our true week open. Very, very important. We are below our true week open. And now we can see that after taking our key level, we had this expansion to the upside. So having this expansion to the upside, price left behind what? A fair value gap. Price left behind what? A fair value gap. I'm going to delete this. We don't need this. Price left behind what? A fair value gap. And today we saw price using this fair value gap to push price to the upside. We saw price retracing back into this fair value gap. And let me tell you something. Once we enter new side of the curve, we are bullish up until this high is taken, which means I don't care about this order block. I don't care about this one. I don't care about this one. I don't care about any bearish key level. Once we enter new side of the curve, we are expecting bullish PDRAs to fail. That is what we are expecting. And again, okay, tomorrow is NFP, what are you thinking? Price gave us this dealing range, right? And after giving us this dealing range, price gave us this new dealing range. So what I'm expecting at the moment is I'm expecting price to leave behind a fair value gap here. And this is a fair value gap that we can use to look for buying opportunities tomorrow, if it happens that this high is still intact. But this high being taken before NFP, it is going to be very, very difficult. I want to see price staying below this high before NFP so that this fair value gap can sponsor a movement to the upside. That is what I want to see. I'm not saying that is going to happen. I want to see this fair value gap being left open, or I want to see price being here for a long time and then push for buy side. And again, guys, something that you need to understand is whenever we have red folder news later on the afternoon, expect London session to be slow. By Longori, you did study quarterly theory, from quarter 1, 2, 3, 4, this is what happens, blah, 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 blah. I don't know quarterly theory that much, okay? But what I know is that from an expansion, this is what is likely to happen. From a consolidation, this is what is likely to happen. So if it happens that London session indeed we consolidate, then I'm expecting what? I'm expecting New York session to do what? To expand, because we have read folder news during the afternoon. I'm going to disable you guys from annotating. Someone just annotate it here. Okay, so this is what I'm expecting. I'm expecting a bullish NFP. Listen very carefully. The reason why I'm saying I'm expecting a bullish NFP is because we are still below this high. But if price takes out this high before NFP, for me, it is going to be a very complicated NFP, which means if this high is taken before NFP, I'm not going to trade NFP. I am not going to. Why? Because at the moment, I'm expecting this high to be taken during NFP. I have to know where price is going. So I'm expecting this high to be taken during NFP. But if it happens that this high is I'm expecting this high to be taken during NFP, not before. But if this high is taken before NFP, it erases everything. I don't have any idea if it happens that this high is taken. Then I don't have a target because I have to know where price is going. Or at least I can say I have to think what I know where price is going for me to look for opportunities. But given that, look at this. As we were retracing back here, we saw expansion, retracement, and then there's an expansion, 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 expansion. But as we reach this level, price reduced its energy. We no longer saw these big moves to the downside. Okay. But after taking this thing and after breaking structure here, we started to see these energetic moves, which is what we want, right? That is what we want. And then NFP, I can simply say, maybe you are likely to be bullish. So what we have to understand now is anatomy of a daily candle. The internal structure of a daily candle, you have to understand that, how a daily candle starts. Our daily is divided into 3 sessions or more, but we are going to focus on 3 sessions, which is Asian, London, and New York. And a session that we are willing to trade tomorrow is New York session. So what am I expecting, or how does a daily candle form? I'm not going to go deep into it because we have like 9 minutes left. One, Asian session is likely to consolidate. London session, 80% of the time, London session is going to give us low of the day. And then New York, just a continuation. And that is what we call a classic buy day if it happens tomorrow. So what do I want to see? I want to see price on lower time frame. I want to see price consolidating during Asian, then London to manipulate into a key level. And then I have change state of delivery during London, and then New York continuation. That is what I'm expecting. And again, remember that we have to be below our 2-day open. We have to be below our 2-day open. So if we were to monitor this here, anatomy of today's candle, what candle do we have? We have a bullish candle. Okay, it's a bullish candle. This is our daily candle, today's candle. So you can see clearly that we are clearly at premium of this range. So I'm expecting price to retrace a little bit to the downside and then from there look for buying opportunities. I don't expect this side to be taken at the moment. I want to see price retracing. Even if there's possibility of this low being taken before price goes up, but at the moment I won't say this low is going to be taken. Why? Because this low was responsible for paging liquidity resting below this low here. So this is sort of a protected low. Okay, it's a protected low. So the way a daily candle starts, it starts off with a consolidation followed by manipulation into a key level, then expansion to the upside. So in other words, I can simply say, hey, Lang, I might be wrong. And if you have a different idea, feel free to comment or share your idea, okay? Because we are not perfect, okay? So this is what I'm simply expecting tomorrow. I'm expecting price to take out this high here and this high. Not necessarily what this high is going to be taken tomorrow, but at the end of the day, I want to see this high being taken. There are relatively equal highs up there, which means we have a lot of resistance. Is it resistance? Yeah, we have a lot of resistance up there. Or we have buy stops resting up there. So you have to take out these buy stops. And you can see that the fact that price closed above this bearish gap is an indication that this gap is not valid. And again, a new gap forming within an old gap. A new gap forming within an old gap. We have overlapping fair value gaps, which means we have what? A very sensitive area, which we call a BPR. It's a BPR. So we are looking for buying opportunities from this BPR here. We are simply moving from daily or weekly what? Weekly key level, which is a weekly redelivered rebalance PDR rate, and we are going for what? Weekly external range liquidity. But on daily time frame, we have all these. So tomorrow, I'm simply expecting a bullish candle. And again, guys, pay attention to the way today's candle closed. That is what I want to see within a key level. I don't want to see an energetic move or a candle closing below yesterday's candle if I'm bullish. Okay, I want to see that. This is more like manipulation. We are taking sell stops resting below, or we can say a stop hand. We are taking stop losses resting below this low here. And that is what I want to see. Here are our results. After our post NFP, I did mention that I want to see price taking out. I did mention that I want to see this BPR here holding price up until this high is taken. And this was our primary target. As you can see, around Friday, price managed to take out this high. And I want to believe that we are still going for this high. And on our lower time frame, as I broke this thing down, I did mention again that I don't want to see this low here being taken. And we can see clearly that price didn't go below this low here, and it did use a hidden range that I was talking about last time on Thursday. Okay. And then we respected this level gap or this order block here, or you can see this tiny inverse level gap here. So price respected this inverse level gap. And after respecting this inverse level gap, we saw price pushing up until this high is taken. And at the end of the day, NFP was bullish. And attached on our right side of our screen is a trigger took, but unfortunately that a tiny spike took me out. Yes, I recorded a loss, but the direction was very correct. And I still believe that gold is bullish. And on our lower time frame, we had what we call SMT. We had SMT with silver, and gold was stronger than silver. So it was the best instrument or metal to look for buying opportunities from because it has a stronger pair. Let me show you. Okay, I won't be able to do that. Oh, let me do that. Okay. So you can see that silver took out this low here, but gold failed to take out this low, hence giving us what we call SMT. And again, I did mention that according to Interbank price delivery algorithm, we have what we call power of three, consolidation into manipulation. And this was manipulation into our daily key level. And then the moment this high was taken, that was buy program being activated. And this was accumulation into manipulation, followed by what? This distribution. And then reprice back into this gap here. And after repricing back into this gap, we saw price printing this dealing range here. And after printing this dealing range, it was a dealing range that was to be used on Friday. And again, very, very important. I did mention that normally when we have red folder news during the afternoon, during London session, I don't recommend you guys to look for trade because London is likely to lag or London is likely to consolidate. And you can see that we were stuck within the same area during London session. Our London session was from, looking for London. Our London session was from this point here up until this point. And you can see clearly that London, nothing happened. We were just stuck within the same area. And during or pre NFP, we saw price going to the downside. And after going to the downside, there was SMT again with silver. Okay. And then this is how the day unfolded. We saw NFP pushing price up until this high is taken, which is indicated or marked with this line here. We saw this high being taken. And after this high was taken, you can see that gold, you can see that gold printed a new 1 hour daily range. Pardon me, please. My network is very slow. Okay. And after this high was taken, you can see that this there was a new daily range printed, and price is using this ready delivered rebalance PDRA to push price to the upside. So that was that with NFP. And again, guys, mentorship is available at 100 USD Google rate, and it's a once-off payment. And then we have our monthly signals available at $30 per month. Mentorship 100 USD once-off payment, and then we have monthly signals available at $30 per month. Thank you, guys. I hope this was very educational. Thank you.